Hey everyone, how's it going? It's Dan Russo, Chief Market Strategist at Chaikin Analytics, coming to you with another updated thoughts, ideas, what's on my mind. It's Thursday afternoon. We're getting through the week, and that is good. Generally speaking, grinding to the upside for equities, despite horrific economic numbers. Quite frankly, the claims numbers around 900,000 initial jobless claims. Huge miss to expectations, came in a lot worse than everybody was thinking. And you may sit there and say to yourself, well, then why are stocks going higher? I think it's pretty simple. We're going to hear from President-elect Biden tonight, and he's going to put forth a $2 trillion spending bill / stimulus bill. I think we're still in an environment where bad economic news is good news for the market, number one. Number two, all the spending is inflationary in and of itself, in my opinion. So you need somewhere to protect your purchasing power. I think equities do a good job of that. You can see fixed income products have been under pressure. We've been writing about it. We've been talking about it for a while. Fixed income products have been under pressure. Yields have been going higher. The question is how far can they go? I don't think you're going to see the 10-year yield go much above 1.5%, 1.75%, kind of back to the levels where they were pre-COVID, pre-falling off a cliff before COVID. I don't think the Fed is going to let it get much more out of hand than that. My view on that is you still have then this kind of almost Goldilocks type environment for equities. Because if rates are not allowed to rise all that much, then growth stocks probably still work. At the same time, if stimulus starts to even remotely help the economy, real people on the ground, then the value trade can continue to work. Things like banks, financials, materials, industrials, energy, that can work as well. So you almost have this environment where you don't want to get too hemmed into a style. You don't want to say, well, I want to own growth, or I want to own value, or I want to own large cap or small. You get it. It's going to be important to just pay attention to where is the relative strength. Because I think a lot of things can work. It's going to be a function of what can work more. Obviously, things like Bitcoin can work in an inflationary environment. Long time listeners to my calls with clients know how I feel about that and how I think about it. I think that commodities can continue to work. You've seen it in the ags. You may have noticed it in the amount of money that you're spending when you go to the supermarket or if you order online. I'm a big fan of Amazon and Whole Foods myself. But you're seeing it. The price of what you're paying for groceries is moving higher. You're seeing it in the agricultural commodities, corn, wheat, soybeans. You're seeing it in agricultural ETFs, or funds that hold stocks that are levered to ag, right? Fertilizer companies like Corteva and Mosaic, names like John Deere. A lot of different ways to play it, and that's my point. I think it's important to have an open mind as we continue to go forward in the market. Here for us within Chaikin Analytics, obviously utilizing our 20-factor model and our relative strength work, our money flow work is helpful in staying on the right side. I'll continue to identify what I think are the big trends, the big themes, and incorporate that into our views. But we also have earnings season coming up as well. So that we're kind of shift now from the micro to the macro. Tomorrow, the big banks, as they often do, are going to kick off earnings season. We're going to hear from Citi, Wells Fargo, and JP Morgan. The big ticket is obviously JP Morgan. Everybody wants to hear what Jamie has to say. Jamie tends to be a straight shooter. He talks pretty candidly about the business and what he's seeing out there in the world. So we want to pay attention to the JP Morgan conference call tomorrow. We want to pay attention to what Jamie Dimon has to say, not just about JP Morgan's business, but about what he's seeing out there in general. I think that can be helpful. Now, the banks have been an area of the market on which we've been bullish after being bearish for quite some time, right? So not remaining dogmatic. When the model shifted, when relative strength shifted, when the yield curve started to steepen, you connect all those dots and you say, probably doesn't make sense to be bearish on banks anymore. As a matter of fact, it probably makes sense to start looking for opportunities within the banks, and we've done that. We've highlighted it. I've gone in different media venues and talked about the bank ETFs, KRE, KBE, that are looked upon favorably in our ETF model and are continue to be bullish or very bullish within our model. However, what I will say is that going into the prints tomorrow, those ETFs are run and they're near term overbought. So depending on the type of investor slash trader you are, that's some useful information. If you're an investor, probably not that big a deal. You probably want to ride the trend to the upside and obviously pay attention to what Jamie has to say tomorrow. You want to pay attention to what Citi has to say as well, because they're levered globally. But if you're shorter term and looking for opportunities, just recognize that those funds are overbought because the bank stocks have done so well of late. So those are my thoughts. Zooming back out again, big picture, nothing's really changed as far as I'm concerned. Markets continue to grind higher here and abroad. Just want to be on the right side of it. Obviously, the reflation type groups are doing well, and I think that's going to continue. Energy, financials, materials, industrials. I think tech has hit an inflection point, is likely to move higher as well. I think there's a lot of opportunity out there. I don't think you want to hem yourself into one style. Be open-minded to ideas and where they could come from. I think that is going to be the best course of action through the first quarter of the year. Obviously, we want to listen to earnings reports and hear what companies are saying about their businesses, while also monitoring what's happening on the economic front. And obviously, we do have a change in the White House. We'll see what kind of policy shifts we get. It's definitely an exciting time. I'm going to continue to come to you with my thoughts as I have them. Hopefully you find this helpful. Other than that, be well, be safe. I'll talk to you soon.